We've all heard the famous quote by billionaire investor Warren Buffett, time in the market beats timing the market. And while there's a whole lot of channels here on YouTube that claim they have the secret sauce for catching the exact top or bottom of the market, the reality is most of you won't be able to do it. I'm Andy Tanner, and today I'm going to explain why timing the market perfectly is a complete myth and why trying to do so will only cost you money in the long run. I'll also share what I believe is the correct and proper way to approach investing in the stock markets. You don't have to worry about getting in or out at the right time. So let's dive in, and to do so, we're going to use the handy cash flow jack-in-the-box. One of the best ways to think about owning a company is to compare it to our trusty cash flow jack-in-the-box. When you build a business, the first thing you look at is the work and the value you provide to other people. If you look at other companies like Apple, they work really hard every day to give quality products and solve problems for people. That's what the handcrate represents, is the work that we do. Warren Buffett looks at this a lot because it has a lot to do with the moat, the protection. The more valuable the work that's done, the more valuable the company is. Of course, they go to work and they do this every day to produce cash. The customers spend their money, and if they do it well, there'll be a profit here. And that's how you build a business. Well, a lot of people don't know how to build a business. I couldn't build an iPhone. I couldn't drill an oil well. I couldn't start a bank. I'm not smart enough. So what I do is I buy these businesses that are already built by entrepreneurs that were built like Steve Jobs and Elon Musk and the smart guys, and I'll pay them a little money to do this. And this little price tag is where people get caught up. Oh, gee, if we go to CNBC or Bloomberg or different channels on YouTube, they'll always be talking about where the price is going. Oh, the price is down here. The price is a new high here. Look at the price of Bitcoin. Look at the price of gold. Look at the price of real estate. Look at the price of stocks. Price, 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 price. I look at it differently. Rather than trying to guess where the bottom price will be or the top, I see when a price looks good by saying, how long will the cash flow, how long will it take for the cash flow that this produces to give me my money back? That's called a return on investment. And how fast that happens is what we call the rate of return. How fast, if I buy this company, how fast will the work produce cash flow to give me my money back and more? Once I have this well established, I bought a good stock, a good price, just like when you buy something in the store, you can clip that price tag off when you take it home, and you can just enjoy the cash flow regardless of where the price goes up, down, or after. Now, we have a secret sauce here at the Cash Flow Academy where we actually know how to help investors get a faster return on their investment than most people, how to pull more money out of that stock and the work that it does and the opportunities for cash flow as opposed to timing the market up or down. That allows us to compound and tap that massive power, that wealth building power, compounding, where we no longer have to worry about the ups and downs. And I'll tell you, it'll be quicker than you think as you learn how to pull more cash flow. So owning a stock is owning a company. Look at the work that it does, look at the cash flow it produces, and then we can help you say, well, how can we get our money back faster when we buy that company? Trusty cash flow jack-in-the-box, great teacher every time. Now that we both agree that investing for cash flow is much better than trying to time the market, how do we want to start building an investment portfolio that can weather the ups and downs of the stock market? Check this video out on how we would structure a rock-solid investment portfolio for complete beginners. It'll be well worth the watch. And share your opinion in the comments below. Is it better to time the market or just enjoy cash flow over time? We're excited to hear from you. We'll see you next time.